Hi, today is Monday the 12th and this is the weekly recap on the current trades. A very quick look on July. I've decided to keep it to expiration since over the last few weeks I scaled it down to next to nothing, less than 5k. The short strikes on 45.75 are still fairly safe. That being said, on the large portfolio margin account, I would probably need to remove this risk on the upside. The downside is not so much of a problem because it's over 12%. That being said, on Thursday when we had a bit of a vol spike, my PM margin went up by 10-20%. So this is always on a PM account. Something to watch out for is that you can have a surge in margin requirement. At this point, the 4600 is no longer traded, so if I can't close it, I would probably just buy one for 10 cents here, and that's it. That would definitely reduce my margin by quite a lot. Of course, I will check whether the margin is an issue today. Lower volatility is actually good. Again, the chances of reaching 45.75 are pretty low, although we can still have a breakout of the 43.75. So I'll have to be careful, and maybe it's just easier just to move out and close the trade now. Nothing much to say about this one. Let's go to August. August is holding okay in this frustratingly bullish market. The trade is not performing, but it's still pretty safe. However, I have to check for the vol skew. If I look here, we see that the vol skew, the bottom of the August, is close to my short, so I should be a little bit careful. Again, if the market breaks the 43.75, of course, July is not an issue, and we here see September, as September is a cycle to be opened soon. So on this one, I have to be a little bit careful. It's not really a trade smash at this point. It's just that we may have a rapid deterioration of the call side if it does. Of course, as time goes by, we have the trough moving towards the money. So it's just that this bull run was a little bit too early for this trade. Those things can happen. So if I maybe just rolling this one up, and then it would be something like Condor, something like this. I would lose out $140, something I would like to avoid, but this is just to be on the safe side. Apart from that, I didn't do much last week. If we look, the week before last, I did a PCS roll here, and last week I just added an iron condor on 38.75, 3900, and 46.25. So pretty easy going. When volatility is low, we know, especially in this low theta approach to, I would say, crazy markets, we have to extend the build-up phase, which generally closes at 40.90 T. So I will probably, in order to get to my profit target around, let's say, $600-700, I don't think I can get a lot more without changing the risk profile of the trade. So I will have another add-on, whereas I should be at cruising altitude doing very little to this trade and start moving capital from July to September. September, I haven't been able to enter it because I have an issue with the new account. The fund is moving. If I enter now, or at least sometime this week, I have to check where I can get a flattish delta. I proposed something like this last week for those who want to enter. This looks okay. The absolutely no upside risk, and delta is flattish. So that's something I could consider even today. Of course, I have lost out on the vol pop on Thursday, but when the market goes up, it also makes my combos cheaper. So this is something I would probably still consider when when the new account is operational. I will of course update on Slack about this one, and I hope to be able to enter it by Wednesday. So very short review today. There's not that much to say, and I would say it's already comfortable enough in a frustrating bullish market to be able to do as little as possible, which of course is part and parcel of my quasi-institutional trading style, because I want to adjust as little as possible on a larger account. Anyway, thank you for watching. There will be of course a lot more updates on Slack during the course of the week. Thank you for watching, and bye for now.